let's talk about your top financial resolutions for 2020. Give us your top 5.
Top 5. That's a tough one. But so first of all, I think it's crazy that people don't have a budget. I mean, that's boring and mundane and doesn't help you that much on the surface. Our country's running out of money. People live paycheck to paycheck, and mostly because they don't have a budget, they don't know where the money's going. That's number one. Mm-hmm. For sure, rebalancing your 401k. So many people they spend all this time setting an allocation, 80% stocks, 20% bonds, 50-50, and they set it and forget it. If you're not going to do it 4 times a year, which is what I recommend, you got to do it at least once a year. Stocks are up almost 30% last year, which means, and bonds had a great year too, but your stock and bond allocation is now out of whack. So you have to rebalance that at least once a year, if not more.
Ooh, don't run from the stock market. That's an interesting one.
How many times have we sat around this desk and heard that outflows from mutual funds? It's month in and month out. Last year was the biggest single year for outflows in the history of investing. So we've heard this, to make it a little political, since the election of 2016, you have a have and a have-not camp. And the have-nots have said, Trump's going to ruin the economy, Trump's going to ruin the stock market, I'm not investing in the stock market. And people have pulled money out little by little.
But isn't that just for mutual funds? Isn't some of that money going into ETFs, or is that everything?
It's not. So the outflows are not showing up at ETFs. So let's say $100 comes out of mutual funds, a couple of bucks goes into ETFs. It's not what you think intuitively. People are saving money on mutual funds going into ETFs. Most of the money, frankly, comes out of the 401ks.
And where's it going?
It's going into bond funds.
But we saw the flow out of bonds, though, in the last month, in December, into equities, I thought.
So I was about to say, you have an outlier month here and there. Look at 1 year's data. Look at 3 years' data. You'll sit back and go, how could all these people take their money out of stocks repeatedly and put it into bonds? That's exactly what people have done.
All right.